Is it happening? Oh, it could be happening. The perfect storm, the setup that crypto investors have wet dreams about, could be quietly unfolding, and the outlook couldn't be potentially more bullish, no matter what the news or short-term price action is saying right now. I know the fear is high. The masses are busy doom-scrolling recession fears, buying gold to sit out the inevitable Great Depression and the end of all things. Waiting for the magical perfect time to re-enter to risk assets. Smart money's already moving in, though. So let's talk about what's happening right now, why it's happening, and why this could be a perfect storm in a teacup. The ones who stay patient and stay positioned are the ones who will probably walk away with the big win here, because quietly behind all the recession headlines and tariff drama, global liquidity has been at all-time highs for 3 days straight. The money printers are only just getting started. Things are going to get so much crazier. Stimulus in China in response to the tariffs. The United States will at least end quantitative tightening, will lower interest rates in the coming months. When M2 expands, though, like this, it has been recently, it is usually bullish for risk assets, but it doesn't happen overnight. Historically, Bitcoin reacts to these moves with a time delay. That time delay is still up for debate, but it's anywhere around 12 to 15, 16 weeks, give or take a little. If the 108-day offset scenario plays out, that puts Bitcoin in the middle of the slow bleed phase right now, which we could see another maybe 2 weeks of sideways chop before the next real rally begins. Now, the proof could already be flashing in gold, by the way, when the world's feeling the fear. I got the fear, man. Gold is always the first to catch a bid. And in case you missed it, gold just ripped to an all-time high, over $3,300 at the time of recording. Might be even higher by the time you watch this video. Gold's breakout could be the signal we've been waiting for. Bitcoin often follows, not a perfect correlation between gold and Bitcoin, but when it does follow, it follows faster and it follows harder. Gold attracts the conservative, safe haven crowd first, but Bitcoin, being the higher beta, reacts more explosively once the capital starts flowing into risk assets. The smart money knows this. Bitcoin whales been aggressively buying Bitcoin during the tariff wars, while short-term holders have been selling. April 9th, for example, saw a total of $3.6 million in Bitcoin bought up by whales in the single biggest accumulation day since February 2022. Now, that doesn't sound like the start of a mega bear market. In fact, quite the opposite. If Bitcoin continues to track the movements of M2, then the next rally could actually end up sending Bitcoin to $144,000. And the message that gold is sending to the market right now is to expect a potential double whammy. The next thing we need to discuss here is the era of rate cuts and stimulus, which is almost upon us. But before we break that down, guys, if you're trading these markets, you want to long the rips, short the dips, because guess what? There's been money to be made in the volatility here. Without a doubt, we've been sharing some of those setups with you guys here. But if you want a great exchange to trade on, check out Femex. Now, they've got a crazy deal going on right now. You can get $10 just for starting your account. You can get up to $500 in deposit bonus. So you deposit $2,500, and you get $500 put back into your account as a deposit bonus. That's an insane deal. $1,200 in trading bonus. And guess what? Here's the kicker. Doesn't matter where you are. Femex is available to everyone, everywhere, no KYC. All you need to do, click on that link down below, and you'll be able to start your account. Okay, and you can take advantage of those sweet offers. Start trading with deep liquidity across all the most popular coins. Link down below. Go check it out. So let's talk about JP Morgan. Okay, JP Morgan CEO Jamie Dimon has been doing his part recently on behalf of Wall Street to put pressure on the Fed. First, JP Morgan raised its recession odds for 2025 to 60%, up from 40%. Now, Jamie Dimon is out coming to the rescue by proposing that big banks like JP Morgan could step in to stabilize the markets if only the regulators will loosen those capital requirements. Those pesky capital requirements added again. Now, these capital requirements are rules put in place after 2008 to prevent banks from blowing themselves up. What could go wrong if we reverse those? He said during JP Morgan's first quarter earnings call that this plan wouldn't be relief to banks. It would be relief to the markets. With Jamie Dimon stirring the pot, the writing is on the wall, and the market, they damn well know it. Intervention to some kind of extent is needed, whether the Fed likes it or not. And Jerome Powell's most recent statement said that he doesn't give a shit about markets. Everything's working fine. But pressure from banks is rising. Trump's tariff war isn't just political theater. It's a tactical move designed to back the Fed into the corner, as well as China and other players, renegotiate trade deals, etc. But the Fed is a major target of this. The strategy is simple. Turn up the economic pressure, spook the markets, force the Fed to cut rates to stabilize the chaos. Trump needs lower rates, and Jerome Powell's currently not giving it to him. But Fed Chair Jerome Powell is playing politics here. He's playing with Trump. He's playing at his own game. First, the message was, well, we'll step in if the bond market turmoil spirals any farther. This is Jerome Powell, by the way. Now, his message is that, well, larger than expected tariffs likely mean higher inflation and slower growth. Well, Jerome Powell is trying to sit on the fence for as long as he possibly can. Are you really buying that the Fed's just going to sit back and let it all burn? I mean, to an extent, they don't worry so much about the equity markets, but they won't let the bond markets burn, and they certainly won't let unemployment go insane. That's what their mandate is. Someone somewhere is going to have to intervene with something. Let's just put it that way. Fed's a likely candidate to do that. Now, the market was already starting to price in not 2, but 4 rate cuts this year because the recession alarm bells have been ringing thanks to the fallout from Trump's tariff war. The Fed so far has been relatively hesitant to cut rates too early because if inflation is still running too hot, then they're not going to be able to do it. But that's a call the Fed may have got wrong, which could work in our favor down the line. Big tech companies like Apple have actually been stockpiling inventory, flying in extra products ahead of the new tariffs, all to try to lock in lower costs. Now, once that excess inventory filters through the system, which could take a little while, inflation won't just cool, probably going to fall off a damn cliff. And when that happens, the Fed will have no choice but to cut rates and to fire up the damn printers again. Now, the QE, I know we like to talk about QE. QE only really comes in an extreme crisis, and that may or may not happen. If we at least get lower interest rates, that's probably going to be enough to move things forward. We need the Fed to even give the slightest mention that they could intervene in the bond markets with some form of QE, or at least end QT completely, and that would get markets excited. Okay, risk assets like crypto could pump hard in that situation. Not only this, but Fed Chair Jerome Powell just showed support for stablecoin regulation on a panel at the Economic Club on April 16th. He said that the Fed plans to loosen rules on crypto banking to try to spur innovation, and of course, stablecoins are one of the biggest buyers of U.S. debt. All incredibly bullish, but something the U.S. is behind on already is altcoin ETFs, because while Trump is caught up in the tariff wars, Canada just launched the world's first spot Solana ETF. Canada, baby, let's go. Let's go. Great news, Canada. Great news. Congratulations. Right now, however, America is not doing it. U.S. investors are still stuck refreshing their news feeds, waiting for the SEC to make up their mind about Ethereum ETF staking, which has just been kicked down the road again. F the SEC. Whatever. Hey, those guys. But on April 16th, 4 of Canada's biggest ETF issuers, Purpose, Evolve, CI, and 3IQ, are ahead of the curve here because not only is this a spot altcoin ETF for Solana, but it has a staking feature already built in. Basically, Canada looking down and saying, eat it, America, eat it. You heard that right. Investors in Canada won't just be sitting on those Solana ETF bags. They're going to earn passive income from staking as well. SEC in America dragging its feet, but that probably won't last for much longer. We'll get altcoin ETFs in the USA. And this move actually puts more pressure on the SEC to play catch up like it did before spot Bitcoin ETFs. Now, perhaps history is going to repeat here, only this time with Solana and other altcoins, XRP, Litecoin, Cardano, Dogecoin. Now, October is the final deadline for approval, and if it's a yes to everything, then the crypto industry is going to be absolutely massively legitimized, even more so than it already is right now. But that October final deadline, that's just the final deadline. The next deadline is actually in a week or so. Not sure we get it that soon. We did just get the new SEC guy approved the other day, but those altcoin ETFs are coming. While the altcoin ETF inflows themselves may be pretty low compared to ETH and their Bitcoin counterparts, I'd still expect to see a ton of liquidity flow into the cryptocurrency market simply on the hype of all this news happening. So if, indeed, all this stuff ends up being the perfect storm for the next massive rally, then Trump, of course, needs to be sending a rocket up his own damn ass here to start stacking the orange coin. Orange man, orange coin, let's go. Put it in the strategic reserve, Donald. Let's do it, man. Now look, Trump, as the executive, he has passed an executive order to keep the Bitcoin USA has, but he doesn't have the authority to spend new money to buy Bitcoin. But they can find budget neutral ways to buy Bitcoin. For example, selling off the cheese reserve or selling gold cards and then using that money to buy Bitcoin. All that would put China in its place and force them as well to look at a strategic reserve asset, which all sends the price of Bitcoin soaring. Now, nothing's been confirmed yet. The Trump administration seems to have all options on the table when it comes to Bitcoin. The tariff revenue is one option to help raise funds to buy Bitcoin, but there's also the possibility of actually selling some of the gold reserves too. Not just the cheese reserves, guys. You got to keep cheese reserves. It's gold. Who needs gold when you got cheese? All right. Anyway, if the USA does indeed announce it's buying 1 million Bitcoin like the Loomis bill gets passed actually, then a Bitcoin Policy Institute exec is actually predicting that this event will be a global seismic shock. The economic order will never be the same, and this could send Bitcoin's price to $1 million per coin in a very quick amount of time. Now, maybe we don't get to $1 million per coin in like a few days. Maybe this cycle still tops out at 250K even with that kind of news, but the game will be on and stacking will begin. People are going to say it's going to be the Bitcoin super cycle. I'm just fighting words, dangerous talk. But with this kind of fundamentally bullish stuff happening, it's also not that insane, is it? Thanks for watching.